Hello everyone, this is Dan Gramza and welcome to Gramza Market Studies for Friday, July 14th. I'd like to mention to you we've added a new market. I put a new market down here in the lower right hand corner. That's the Russell 2000. Now if you're not familiar with that index, it is an index of small cap index of 2,000 publicly traded companies. And this is really a very interesting index. It's very similar to what you're seeing for the mid-cap 400, the S&P mid-cap 400 right here. What's interesting about these smaller companies is that they're innovative. They can really have some volatility. We've seen in the past where this category, can lead all of these indices. So it's one that we definitely want to keep track of and pay some attention to. I think it's worth doing. Each one tick movement in that contract is $5. And if you want to get the dollar value of this contract, you multiply it times 50. So we'd look at 1429.8 times 50, and that would give you the dollar value of that contract. Right now, I think the bias is for a move to the upside. I'm not sure if the fundamentals are there to really support this, but that's what I'm looking for. In fact, that's what I'm looking for in this NASDAQ market. I think the buyer's a little more muted than I expected on Thursday, but right now I still think the bias is for a move to the upside, and that is what I'm looking for on Friday. Now the US dollar, we can see it remained kind of neutral with regard to the euro. So the euro's a little bit weaker. I was again looking for an inside type day. It broke a little bit lower. The bias is for a move to the upside, but I'm looking for a sideways move in that market for Friday. Now we look at interest rates. Here we can see the 10-year notes did give back some of those gains it had previously. I am bearish on this market, and I do look for a down move. I've also had some questions about the magnitude of change, the dollar value, from that bearish level down to this bullish level. And that would have changed when the market traded through that bullish level. So the magnitude change is 42 ticks. Each full tick in that market is $31.25. The dollar value there, where that number came from, is 42 times 31.25 is $1,312.50. Now in bonds, when we traded above that bullish level, the magnitude change here between those two is 122 ticks times $31.25, and that's $3,812.50, if I could just say that, per contract. So it gives you an idea of what that represents in terms of dollars and cents. But let's move on and let's take a look at what's going on with gold. Not much, and I expect that to continue that way. I'm looking for an inside day for Friday. Well, copper traded below its bearish level. Magnitude change here is $250 a contract. I do look for some further movement to the downside in the copper market, but I'm also looking for a bounce as well. Right now, a down close wouldn't be surprising. Crude oil, it did move higher. I don't see strong fundamentals for this market. I'm still cautious at these levels. Inside type day, I think, would make sense in that market. Natural gas traded below its bearish level. The magnitude change here is $100 a contract. And I look for further movement to the downside. But again, I still think the bias there is for a move to the upside. And you can see in beans it fell out of bed. For this market, I'm looking for unchanged to slightly lower, about 1/3 of the range that you're seeing there right now. Well, that concludes today's market studies. Thank you for being with me. Look forward to being with you again tomorrow. In the meantime, take care.